Alright, good evening. Let's go with round two here in attempt to record the introductory video for simplerstocks.com. Oh, this for tomorrow, payroll Friday, and should be an interesting situation. We've got the markets pulling back for us a little bit here today. Something I've been looking for, warned of last night, not so terribly just yet. I was kind of, honestly, as history would have it, we would start this process just after the report tomorrow morning. This one came in a little bit early, sitting down here this morning. We've sat down now. That's two deviations off of the current average or mean price here in the S&P. John has been forewarning and talking about a tremendous amount of open interest in the options market here at the 2100 strike in the SPX. And this is like a case of literally the derivatives markets, pretty much controlling what is going on in here. The big guys, this thing bids up 2120, they stomp on it, they sit it back down. It sits down into the 2070, 2080. What do? They bid the thing right back up. The interest is in this thing remaining, in close proximity to this 2100 strike on that SPX. That's just, it is what it is, and we've got to play the hand that we're dealt. Okay, so now normally, and I'm not really so terribly interested in looking at a whole bunch of new stuff and getting you all excited about, oh, let's go look and find a bunch of new stuff to buy, right now, because as history would, have us to look forward to anyway, and has, produced this pattern in recent past, and that is that we come into the report and then we sit down for a few days after the payroll report. So in all honesty, that's what I'm anticipating, at least, and that is that we're going to sit down a little bit. Now, doesn't mean that everything out there across the board is going to sit down. Absolutely not. There are these instances such as this AMBA here, and that is what John likes to refer to as the honey badgers. Okay, something like this is just bid, regardless of what a fair percentage of a large percentage of the other stocks may be doing. This thing's up 4 and some change percent today, slamming into this overhead voodoo line. I'm not suggesting that you chase this thing. As long as we've been talking about it, you should have been on this thing for a while, as a matter of fact, but maybe you're not. And if you're not, then I do not suggest you chase. Reason being is we're coming right into one of the very most important voodoo lines right there, and that is called a tree line. And the red ones down here, for those of you who may not be familiar, is a fire line. So this tree line is literally like the second most effective of these voodoo lines. Generally speaking, first time in, price is reflective in nature, i.e. then I would anticipate that it would pull back a little bit, reacquire, rally the troops, go make charge for that level again. We get a close above that $100 mark, and I like to say the rule of tens. Once we get above 100, I look for 110. Above 200, we look for 220, etc., etc., etc. So, get above, successfully deal with this, and we can start talking about $110 price and AMBA. There's little things that you can do out there to continue to get paid, like the CHMI that we've talked about a little bit. This is not a bad idea. We bought this thing 1760 and 40, average 1750. It's at 1743 today. Say, yeah, it's down a couple pennies. Yeah, but look at here. It's got almost a 12% dividend yield, 11.5, almost 12% dividend yield, and that's as much as anything what that particular play is about. The other, remember, we just talked about last night, AT&T. You buy them in the 32, 33 range, you flip them back out 35, 36. It channels and ranges, and you just kind of be happy collecting that nice juicy dividend that's associated with a a play like that. All right, so. The wins here are a little bit fewer and further between, kind of make the point. Let's look at one of our favorites here, Opco Health, OPK, and guess what? This thing gets hammered today, down, goodness, what, 15%. Look at, hey, one thing that you're going to learn, I'm going to tell you right now, This is the power of the bear. That was a lot of hard work. Let's count them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, I don't know, 15, some odd, maybe 16 trading sessions unwound in one fell swoop. One of our simpler options trading moderators, Tony Laporta, likes to say the bear. It's amazing. It's capable of undoing months and months of hard work in weeks, and weeks and weeks of hard work in days, and maybe days and days of hard work in one fell swoop, and there it is, just like that. That's the power of the bear. All right, I'm not going to get too wound up looking for a bunch of new stuff. I want you caution. That's the modus operandi right now. We've got to be a little careful here, given the fact that we're coming into a major report tomorrow. We'll talk again next week once we've had an opportunity to evaluate the likelihood of the pullback that I'm kind of looking for next week. We'll be looking for buying opportunities if that be the case. Just gotta sort of take it easy out there right now. Look, 1 day left in this week, and still 17 points in volatility, looking for our 19 points, 17%, 19 points in volatility, and that's with 1 day remaining. That is, it's going to be very, very likely a wild day tomorrow, and so caution out there. That's the key. Okay, take it easy, light and tight tomorrow. Don't get wound up in chasing a position and take a chance of ruining your weekend beginning on a Friday, because if something's going to go wrong, don't you just know it's going to be on a Friday. So take it easy out there tomorrow. We'll catch up again over the weekend and kind of get ready for next week. Take care.